7, 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hello everyone. Today we are back with a new market sentiment call, and today we are glad to have Anthony back in our middle. Thanks, Anthony, to join our call and to give a nice analysis of the things you saw the last month. I'm very curious about the things you can tell us and where you look at. Hi, Anthony. How are you?
Hey Tim, hey everyone. Thanks for inviting me back on the show, Tim. So I do appreciate it. I think a lot's happened since our last webinar. So,
yeah, absolutely.
I'm excited to kind of get into the charts and have a look at the market.
Yeah, the first chart, you guys did a monthly review from Economy. You can search after it on the LinkedIn page of Economy. It's very interesting and very nice to read. I'm gonna show you the things I saw. This is the one of CoinShares. It is a very popular platform for inflows and outflows. We saw a lot of inflow from big money, institutional investors. It was like around 200 million. What do you think about? Is it because of the BlackRock ETF? How are you feelings about the BlackRock ETF? And what do you think we're gonna see in the coming months?
Sure. So I think what's important to note here is we had 8 consecutive weeks of institutional outflows from the market. So Bitcoin hit the 30K technical resistance level. We then had obviously institutional investors profit taking. They're kind of cautious about the market. They were obviously withdrawing money from digital asset related investment products in the US. Now, literally the same week that BlackRock filed the Bitcoin ETF application with the SEC, institutional inflows, accelerated higher very aggressively, and I believe we're now north of 300 million of institutional inflows into the market over the past 3 weeks. So clearly, institutional investors are confident that an ETF of some sort is going to get approved. It wasn't just BlackRock. We've had now, I believe it's around 7 institutional applications for Bitcoin spot ETFs. And it's also important to note that it's different from a futures ETF, where that ETF doesn't own the underlying asset. It's not backed by the underlying asset. These spot ETFs are actually backed by the underlying asset. So that, institutional investors are expecting kind of like a supply shock to the market, as these ETFs will actually have to go out and purchase that cryptocurrency to hold it in the ETF essentially. So good news at the moment, a very positive sentiment going into the market. However, it's still very early days. Nothing's been approved just yet. So, we could expect pullbacks in the market if, a BlackRock ETF was pushed back by the SEC. But I think there is growing confidence that something will be approved soon. Just, sheerly by the number of ETFs that were applied for in the US. I think that's kind of like a telltale sign that there is movement in the market in the US especially.
Yeah, the interest is high. I saw it also. And the most interesting thing about it is that the exchanges, all the exchanges cumulative, had around 2 million Bitcoins on the exchanges. And when you calculate that, we are on a price from 30K. It's just 1.6% of the assets under management from BlackRock. If they buy all the 2.1 million Bitcoins, they just need 0.6% of their assets to buy hold a bunch of Bitcoin. It's very crazy to think about. For the people that follow, BlackRock had about 10 billion assets under management, and with Fidelity, JP Morgan, and Morgan Chase is like 27 billion. It's a lot. And when you like Anthony said, supply shock, I think when it is approved, when we have confirmation, I think we're gonna see crazy things actually.
Obviously, you have to also take into consideration that it's coming about the same time. Next year we have the halving event as well, so it's going to be a supply shock as well. And of these institutional inflows into the market, I believe it was around 96 or 98% of those inflows are going directly into Bitcoin related products as well. So, institutional investors are betting big on Bitcoin at these levels at the moment, clearly by the level of inflows.
Yeah, okay. Do you think the ETF gonna approved faster than the days they have?
It'd
that
be
a
hard to call. I
possibility?
think one of the key things is if there was any asset manager to get an approval of an ETF, it's going to be BlackRock, the largest asset manager in the world. So, having them kind of spearhead the attack and this kind of group effort to get these ETFs approved all at once is clearly an attempt to put pressure on the SEC to kind of get products into the US market.
Because I was thinking about it, and when you look at the futures ETF, the first futures ETF in America was actually launched on the top of the bull market.
Yeah, correct.
It's no coincidence, in my opinion, that it was on the top of the bull market. They launched it because they want to go the price a lot deeper. With futures, you can do a lot of market manipulation, in my opinion. Yeah. And I think actually they want to do the spot ETF proving very fast because the prices of Bitcoin are very low. That's my opinion. I don't know what your opinion is, but if they wait 200 days, it is maybe the double of what we see now, or like 50K. I think when they want to buy Bitcoins for a spot ETF, they want to do it on lower prices. What do you think about that?
I think when you get news coming into the market that's positive or negative, it's important to look at where Bitcoin's actually trading. If Bitcoin was trading at record highs and we had this news coming in about spot ETFs, generally you get a buy the rumor, sell the fact event where everyone thinks it's a bullish event and then it's a sell the fact after the event coming out of it. But because Bitcoin's at these lows at the moment, it's hard to see that it's going to be negative, like a buy the rumor, sell the fact event. You may get some profit taking, but long term, if we get these ETF applications approved, I see it only as being bullish for Bitcoin and the rest of the cryptocurrency market. It will kind of mark the start of large asset managers entering the cryptocurrency market in the US. We already have kind of like spot ETFs outside of the US, but the US is obviously the largest market, and that will be a really kind of the green light for the new bull market in the cryptocurrency market, I guess.
Yeah, if they get an approval with the Coinbase, get an approval with the SEC, it will be nice to put Coinbase forward against Binance. I think that's also a little bit the thing they want to do with Binance and Coinbase. Regulation, they gonna make the regulation hard to do, but I think they want to have Coinbase in front of Binance. That's my opinion, because Binance will do the custody, BNI Mellon will do the custody of the fiat. Yeah, I think Coinbase is the way to go for the big investors. Also,
I think there's clearly a global attack on Binance.
Yeah.
So Binance are having a very hard time, but I don't see Binance going anywhere in particular. Maybe it will kind of die down once we head into that new bull market. Maybe the heat will kind of die down on Binance, but they are having a tough time at the moment. But I think you're right, Coinbase will become a front runner, especially.
Yeah. Okay. The next thing I want to talk about it's like, we see a lot of macroeconomic stuff. The CPI was better than expected, than the forecast. It's very bullish, in my opinion. We see that the DXY index goes lower and lower highs. It's bearish, but it's bullish for Bitcoin. How do you think of the how do you say it, the price action of the DXY in the near future, in a couple of months? Do you see it go lower further, like around the 90, or will it go up?
So this chart was actually I sent to you yesterday. So actually
Yeah.
today, Bitcoin, the DXY has now broken the 100 support level, which was highlighted here. So it's now broken down back into that previous acting resistance level now. So the DXY is under pressure at the moment. If you go into the futures chart of the DXY, you'll see a breakdown. That is essentially bullish for equities and for cryptocurrencies. So there's clearly a rotation away from the DXY. Now, because inflation has cooled to 3%, the forecast was 3.1%. Investors are now expecting that we're approaching the top end of the interest rate hiking cycle from the Federal Reserve.
Okay.
So money market funds are expecting a peak in interest rates, maybe a 0.25% rate hike this month, another 0.25% later in the year. But that should be the Federal Reserve done, obviously depending on data. But judging by the inflation coming down, dropping extremely quickly in the US, that should give the Federal Reserve some ammunition to hold off and take a wait and see approach. And then depending on economic data, if unemployment starts to increase in the US, if jobless claims start to increase in the US in 2024, we may then start to see the interest rates start to come down in 2024 and taper off from those highs. So the market is starting to price that in. That's why you're seeing a big rotation out of the DXY and back into risk assets. So if you take a look at tech, NASDAQ, the S&P 500, they're doing very well today. Cryptocurrencies have had a very good run, and Bitcoin's obviously holding the 31K resistance level. The Dow Jones to me, it looks poised for a breakout to the upside. We can see a rising triangle there. There's a lot of pressure on that resistance level around 34,700.
The Nasdaq is also very nice. Yeah.
So it's a tough one because you look at the economic conditions. We have everyone forecasting a recession, but it doesn't necessarily mean that the stock market can't and won't go higher. The stock market isn't the economy, and that's one thing people need to remember. The stock market can go higher as we go into a recession. So that's obviously important to understand. And with the market now expecting rates to peak and possibly taper in 2024, the market's now pricing that in with a run higher on equities and risk assets and a decline on the DXY. The DXY is really my go-to chart as a risk for the market.
Indeed.
If the DXY is going up, it says to me that investors are rotating back into the global safe haven currency. If the DXY is declining in value, it says to me that investors are rotating out of the safe haven currency and into risk assets.
Yeah, it's nothing more than that actually also.
Simple liquidity flowing into and out of different areas of the market. But for me, the downside target, the short-term downside target is around 98, 97. That's where the 200-day moving average comes into play. We'll probably see a bit of a bounce there. But ultimately, I see the DXY falling a lot lower over the next year.
Do you think the Federal Reserve has some room now to do some quantitative easing, or what do you think about that?
It depends on how severe the economy is or how negative the economy is over the next 12 months. So it's quite hard to forecast. What we do know is, or what I'm expecting is, the central bank or the Federal Reserve moves in stages. So they're generally they move from an interest rate hiking cycle to a wait and see approach to now, okay, we may consider a rate cut, to now, okay, we will rate cut, and now we may need to turn the money printers back on again. So it's just a kind of a cycle that you need to follow. And you need to watch out for their language in their press conferences for an indication as to where they're going to be moving in the future. So no rate cuts have been forecast by any Federal Reserve board member just yet. But the money market fund funds are expecting rate declines in 2024. So sometimes the Federal Reserve can lag behind market expectations, and they generally are late to the party.
Yeah. Okay. Nice to see what you have to tell. This is also very interesting. The rational root, I know him also, and what my point is, when you see here the dashed line, you have always the all-time highs.
Yeah.
For 400 days, before the halving, you have the bottoms. It's actually crazy how correct the cycle on Bitcoin is.
So It's not necessarily a 4-year cycle. Okay, it's
Yeah,
basically
indeed.
but basically this cycle it's roughly 4 years, but every quarter of this circle is made up of 52,000 blocks. Okay, of mined Bitcoin, and then obviously that generally ends around 1 year. So what we're tending to find, obviously this analysis is down to the rational root, so I can't take credit for this, but it links into my next chart. What we're generally finding is all-time highs generally occur 1.5 years post-halving. So around 78,000 blocks are mined, which are mined after the halving event. Now, based on my analysis here, the average bear market bottom generally occurs around 400 days prior to a halving event. So that actually aligns with the rational roots chart. If you just go back a chart, sorry, Tim.
Yeah, no problem, no problem. I'm gonna take him. Yes.
What we can see here is the bottom in the cryptocurrency market is generally 400 days before a halving event. Now, the next halving event is estimated to be in April, May 2024.
Yeah.
So if you subtract 400 days from there, my analysis was saying January 2023 was the low, could have been the low around that kind of time frame. But we had November 2022 as the low, late November, early December as the low. So this analysis and this spiral chart is suggesting that the bottom is in. It doesn't mean we're not going to have pullbacks in the market. We're going to go straight to record highs. There's going to be some volatility. That's always going to happen. But as we move into the halving event, we should start to see an acceleration post-halving to record highs. And if we look at the average time it takes to get to a record high, it would indicate that late 2025 is going to be the peak in the next bull market. So we have, two and a bit years until we reach the next bull market peak.
Yeah, and what you also see, you have the halvings marked with a red line. When you see after the halvings, you have actually after 2-3 months, you have the actually bull run every time again because of the supply shock. And what interesting is now, I don't know if you looked to, but the long-term holders are on all-time highs. It's very crazy to see. They make the bottom now and they don't sell. You have the buy pressure of the big institutions.
Yeah.
when you compare that, when you take that on one thing and you're gonna look, it's very nice to see these factors for before the next halving. It's gonna be a supply shock, in my opinion, that we never seen before.
I have a slightly updated chart to this as well, so I can go into that in a second, Tim.
Okay, good, nice.
What we can also see is most of the peaks in the bull market generally occur between October and December.
Mm-hmm.
So it's generally the end of the year is the bull market peak in cryptos as well. So, of course, every bull market, every bear market is going to be slightly different. But we can use averages from past data to form an educated decision on when the next bull run is going to take. Now, most retail investors use the halving event as the time to buy cryptocurrencies. However, that's a mistake for me because generally you get a big run up leading into the halving event anyway. So we're already up 100% from the lows in November in Bitcoin. So, I think waiting until the halving event and post-halving to get into the bull market for me is a bit of a mistake. Accumulate during the pre-halving stage as well.
Yeah, in my opinion, when you look to the supply shock of Bitcoin, you have a couple of things. You have the miners that react after the halving. They're gonna sell. It's the most biggest selling event for the miners, but because of the interest of retail and whales, the supply shock is very, very good, and the price action is also very good. What you also see is the liquidity is very important. When the liquidity cycle is very low, the global liquidity index is very low. It's always around the same period that the halving starts. You have a lot of new liquidity that comes in. It's actually the most important thing to have new money flow within the system. Then have you also the speculation because of the liquidity that comes in, the price action comes, more people look at the best best asset in the space, like shares or stocks like ETFs, and then they have Bitcoin. Oh, Bitcoin, it performs very well, and then they're gonna try it, and it looks, it feels nice. You have that kind of phase in the bull run, and then you have actually the most important indicators like the market value, realized value to invest in, and because that's very interesting, of very important actually, because the timing in Bitcoin is the most important thing in my opinion. And when you look to the chart I just presented, I'm gonna show you. That's the last thing I want to say about that chart. Wait, you see also it's actually not that difficult when you look to the RSI. This is the weekly RSI. You see the bottoms, and yeah, when it breaks about the macro trend line and you have the bottoms, yeah, it's just a confluence you need to use. And before that, before the bottom is in on the RSI and before the break of the trend line, you must dollar cost averaging to hit a nice average price of the bottom, and then you are settled for the next coming months, I think.
That's it. I think you got to keep your investing strategy simple and don't overcomplicate things. And I think part of it is also not listening to all the FUD and the noise in the market. So there's going to be chop around in the market, and the best way to eliminate that noise is to zoom out on the charts, have a look at the monthly, have a look at the weekly charts, and follow the trend. And what are the charts telling you? Because the charts are really the ones that are giving away the evidence of where it's going to go in the future. So, we could speculate on all the ETF applications. We can speculate on new liquidity coming into the market. But if you just keep it nice and simple, look at the chart, it's a very easy way to understand when to sell Bitcoin and when to buy Bitcoin. So I'll be looking to sell Bitcoin when it hits that, 100 to 150K top end of that chart towards November, December in 2025. That's kind of my target.
Yeah, I have the same thought about it. Actually, it's very creepy.
Obviously, anything can happen. There's a few variables that are different today than what have been present in previous bull markets. We have higher interest rates, inflation still relatively high, so we could be going into a recession. So there are a few different variables we need to be aware of, but technically speaking, the trend is still intact, and Bitcoin is following that trend correctly at the moment.
Yeah. Can you give an update of the chart you had?
Yeah, sure. Let me present my screen.
I'm gonna edit.
Let me jump onto the chart.
Yeah, no problem.
You see the charts now?
Yes.
Great. So this is just a bit of an update. Indicates where the bull market peaks are generally occurring later on in the year. So November, we had a December peak here back in 2013, a November peak in 2017, and a November peak in 2021. So that would indicate we're going to be looking at around November 2025 for the next peak. So appears to be simple. Time will tell if we do get that rally into that new record high. The chart is saying around 150, which is aligned with most of the kind of analysis out there at the moment. So
I have a blow off top around 170, but it's between 150 and 170 for me also. And right. Also in 25. And you see also when you have the bottom from the previous bear markets and you count the monthly candles, it's like 35 monthly candles, like 12 till 14 bearish monthly candles, and then you have a new cycle. It's very crazy to see, but that's why Bitcoin is invented. It's coded, and that's the most important thing about it. Is the scarcity about Bitcoin is the most important thing, and it will do what it must do. I think because of that, you have always the same cycle, But because of the adoption within the network of new people that come in, you have a longer cycle. That's the only difference between the previous cycles, actually.
No, yeah, I couldn't agree more. Every cycle has a different kind of stimulus. So
Yeah.
I believe this one is probably going to be driven a lot by the ETFs that are coming out and institutional inflows into the market. So, you know, every market is slightly different. What drives it higher? You know, last bull market was driven a lot by the liquidity from COVID-19 and stimulus. And this one is possibly going to be done by institutional money coming in through the ETFs. But yeah, we're on track, and I think you know, any pullback for me is a buying opportunity at the moment.
Okay, perfect. I'm also curious about your other charts you want to show. Like I heard about Solana, BNB. You had some nice insights. Can you tell more about that?
Definitely. Let's jump on to Solana. So if you can see my Solana chart now.
Yeah, nice. I love Solana.
I'm looking at this purely from a technical perspective, but we've had a 97% correction from its record highs of 250, and that's in line already with what altcoins generally do in a bear market. So we're generally looking between 90 and 96% for altcoins. Now, in Elliott wave theory, what we generally look for are 5-wave trends and 3-wave corrections. Now, once my chart just uploads.
Yeah, sometimes trading view is slower.
Maybe I have too many charts up.
Yeah, we have time.
We'll just go down to the 4-hourly chart.
Yes, nice. Oh yeah, I see it. Yeah.
Now, what I'm highlighting here is we've had a possible bullish 5-wave move to the upside. So we can count this at 1, 2, 3, 4, 5. Okay, so that can either be a wave 1 of a new bullish sequence to the upside, so it'll be a 1, 2, 3, 4, 5 higher, or it's wave A of a bearish corrective rally to the upside.
Oh, okay.
So it's not a case of being correct at the moment. It's more the case of trying to eliminate possibilities. So we're looking at possibly either a wave 1 or a wave A to the upside. Now, the reason why I think this is kind of bullish through here is because this corrective structure to the downside is in 3 waves. So we have an A, B, C wave correction down, which has ended around the 61% Fibonacci
optimal trade entry. Yes.
Yeah, which is known as the golden pocket, the pullback level. So now I'm kind of expecting an initial pullback, okay, for a wave 2. So this should be wave 1 through here, a wave 2 pullback, and then I'll be looking to go long on the top and use the wave 2 as my stop loss for a move towards kind of $40, that kind of area. And once we kind of get up there, I'll then be able to understand whether it's a 1, 2, 3, 4, 5 of a new bull market, or whether it's A, B, C correction, and we're turning over to go lower. So later on in the cycle, once we get a move into that, 43 level, possibly 60 level, I'll be looking to secure my profits, my initial move higher, waiting for a pullback to then understand the cycles. Now, what I want to show you is a very similar structure has played out on Tesla over the past couple of months, which I traded myself personally. We had a very nice bullish 5-wave sequence through here on Tesla, just to the upside in here.
So, nice gap filling there on the C, on the 61% FIB.
Yeah, so we had a really nice bullish 5-wave sequence to the upside. Again, another 3-wave correction, just shy of the 61% Fibonacci retracement level. I then went long on this wave 1 high and made roughly 60%. I decided to close out my trade around 280, just because I can actually count a 5-wave sequence here. Okay, so we've got a 1, 2, 3, 4, 5. I was hoping to get into that kind of 300 area level, but because I counted the 5-wave structure, I was comfortable closing down and taking that profit. So this is a very similar structure to what Solana is currently doing now. If I just delete some of these lines.
Yeah.
It may take a while to kind of play out, but so far Solana is following what Tesla was doing over the last couple of months anyway. So yeah, I'm not going crazy in the altcoin market at the moment. I'm being cautious. I'm very focused on the Bitcoin market. I'm heavily tilted towards a lot of Bitcoin stocks, but I do have my eye on Solana and also BNB because although Binance are under a lot of pressure, I am a technical trader, and I see this as a great entry from support. So we also, if we put in the 200-day moving average, the 200-day moving average is also coming in around 225. So BNB is currently holding this major support zone. If you're a support and resistance trader and investor, it's a good entry into the market. We could be looking, if the market does well, BNB could move back up initially to that sort of 356 area, which would be nearly a 50% gain. If we break above that, then obviously 172% gain towards the upside. But that's being very optimistic, especially with the pressure that Binance.
Yeah. I see we're now in consolidation mode, and after consolidation, you have expansion. It's like a squeeze now.
Correct.
But the only thing I see also is that you had disbalance because of the strong momentum candles on the left. Maybe we're gonna retrace to make a correction, and
there's obviously a bit of a block here, isn't there, around that sort of 42?
Yeah, indeed.
That would be catastrophic for Binance.
But if you set a stop loss, it's worth to try this trade actually.
No, definitely. I mean, it's a game.
Trading is pure setups and nothing more. You trade the setups and you set the stop losses and you let it play out.
Yeah, no, exactly right. Yeah, so you're not going to win every position. It's a game of probabilities. If you use correct risk management, you should be successful. So for me, it's a nice area to enter into BNB. Yeah, we can see how that plays out shortly. So they're my two go-to charts at the moment in the altcoin market. But one other chart that I did want to kind of show, please excuse the mess, I will explain. There is a theory to the madness. Basically, this is, I know we're obviously a cryptocurrency community, but Bitcoin is a risk asset, and it does follow the US stock market, especially. So during times of risk on. Now, this is another kind of inverse correlation from the US stock market to the DXY. So the DXY is the orange line, and the blue line is actually the number of S&P 500 stocks trading above the 200-day moving average. Okay, so essentially what this indicates is every time the number of stocks in the S&P 500 that are trading above the 200-day moving average reaches the lower bound, which is actually around 20, it's actually a very good time to accumulate assets in the stock market. And vice versa, when the number of stocks reaches extreme levels, which is between 80 and 90, it's a good time to be cautious and possibly reduce exposure and trim down some profits. Okay. What we generally see is every time the DXY peaks, it's also a low in the S&P 500. Okay. So we generally get a peak in the dollar, a rotation out of the US dollar and back into equities or cryptocurrencies. The vice versa is true. When the US dollar is strengthening, we get equity flowing out of money or liquidity flowing out of equities and back into the US dollar. It's not a perfect correlation, but it's a good indication that you should monitor the DXY for major trend changes in the market. And it's just a good kind of chart to watch. The S5TH on TradingView. So it's a good chart to watch. If we get any move down into the accumulation phase, that's when you should be looking to, I guess, put liquidity back into the market to accumulate some stocks and risk assets.
Okay, nice. I have also a nice chart to show. When I see this chart, I must think about do you know the total 2 against the Bitcoin? Did you see that?
I've not seen that, no.
No? It's also very nice to see. I'm gonna share my screen. Do you see it? This is actually the total 2, everything except Bitcoin against the Bitcoin price. Okay. When you we use it like an index. And what's the meaning of this chart? We utilize it because when you in the bottom of this range, when you were in the bottom of this range, you had the altcoins that performing better than Bitcoin. When you go down on the chart, when we pull back, you must accumulate Bitcoin, because Bitcoin outperforms the altcoins.
Okay.
And you have your shifting points. You have now altcoins, now Bitcoin, because we broke this range. We had a range about how many days? 750 days and 6 days. It's a lot where we ranged in, but now we broke the most important support level on this chart, and because of that, I think Bitcoin will go harder and outperform in a couple of months the altcoin market, till we get the old high, or like the 50% level on the FIP levels. We had a lot of disbalance here. I think when we hit that zone, we're gonna see a big altcoin run back till here, maybe. I don't know, but it is a very important level. When you look to the left, it's it's a resistance level, and it's like a good index to pivot in your portfolio management, when you must go in altcoins, when you must go more in Bitcoin, like scaling in, scaling out. I think this is also a very nice chart. A little bit as a chart you showed about the 200 moving average from the stocks above the top performance above the 200 moving average.
It's similar to the Bitcoin dominance chart, I guess. So
indeed.
The inverse of the BTC.D chart.
Indeed, but I prefer to use this one. You must try it for a while, and you're gonna see it's very nice to use, because the Bitcoin dominance, you have a lot of shifts in crypto, and you have a lot of market shares that goes to layer 1s and layer 2s, and I think in the future you're gonna have Bitcoin gonna lose also Bitcoin dominance, I think, because Ethereum will do a lot of good things in the next coming bull market, because that's more usability. When the spot ETF is launched, maybe the Ethereum ETF also will be launched. I don't know, but it's very bullish, and it's also in the staking sector, it has a lot of attention.
Well, you generally, it's a cycle. So generally, there's a front runner, which is Bitcoin.
Of course.
Later on in the cycle, money or profit flows out of Bitcoin into Ethereum and altcoins. We have the altcoin season, then we have the NFT season, and then we have, this year it might be something different towards the end. So generally, when you're coming into the NFT season, we know we're approaching the end of the cycle, but interesting to see how this one plays out.
I'm very curious about these facts, what's gonna happen first and how we're gonna see it now, because I think it will be a whole other cycle than the previous ones, I think.
I'm hoping we don't go up too aggressively in the short term. I want a bit of a pullback, some calmness in the market, accumulate some more. If it goes up too quickly, it's hard to accumulate consistently, so at better prices. So we probably want a bit of FUD, a couple of ETFs push back, and to bring the market a bit of cooling down, accumulate some more, and then we go again.
Also, because when you're gonna take profit, when you're gonna scale out, and you have no pullbacks, it's sad to see, because you don't get in back again. And that's the most important thing when you want to accumulate Bitcoin. You must go back in, but when it goes fast higher, you have no opportunity to go back in.
It's difficult.
It's very difficult. But I think we're gonna do a lot of good stuff in the coming months, coming years. I think, yeah.
It's an exciting time, and I think most people that I speak to are also becoming a bit more confident about the market conditions.
Mm-hmm.
You can see the fear and greed index has moved from extreme fear, which is the optimal time to buy, to now slightly on the greedy side around 64, but it paints more of an optimistic view in the market. So people are becoming a bit more optimistic and starting to put liquidity back into the market, which is a good sign.
Okay, last question, and then I think we spoke about everything. When do you think this year then that we have push higher for Bitcoin and the global crypto market? Do you have a specific month or time zone in your thoughts?
So it's a tough one. We have a lot happening in terms of the institutional side of things in the cryptocurrency market. So if they're approved, of course, sky's the limit going into the halving event. But I don't want to get too excited too early on in the cycle. The halving isn't until May, April next year. So for me, I'm not expecting record highs for another year and a half. So I also understand that during this early stage before the halving event, it can be very difficult to trade because it's choppy. So, I'm just using this as an accumulation phase into year end. And then, we'll see where the market goes going into 2024. But it's a very good sign. We're up 100% already. We probably are due a pullback in the market. So, I'm not going to be going crazy at these levels at 31,000. I want to see a technical pullback. Like I showed you on the chart, the ABC corrections, they're essentially what you want to see from a technical perspective. Once you see a three-wave correction, we can then start looking to accumulate again. So it's hard to put a forecast on the market. It depends heavily on a lot of things. Does the Federal Reserve continue raising rates in next year? Does inflation come back?
Indeed.
Are the ETFs approved? So hard to put a forecast on things at the moment. But I will say I read a recent forecast saying end of 2024, Bitcoin will be around 150K. For me, that's also a bit too soon because I'm expecting so, people are getting excited about the market, but we don't want to get too excited just yet. We're still very early in the cycle.
Where do you think Bitcoin will go when it has a pullback from here? If you specific
the next resistance, let's say we have a pullback in the market down in towards kind of 25K, maybe 20K in a deep pullback, and we start to pick up momentum to the upside. I'll be looking to target that 50K area next during the next move to the upside. So 50K would be the next resistance level for me.
Okay, with us is like 28K, and then we have 25K, and then 22. It's you have a high liquidity order block there. We use a lot of in-house tools from Traders Lab, and what we do is we search after the high liquidity order blocks. It's an order block, but it's also an order block where the volume was very high on specific criteria, and on the 22 you have one that is not retested, and on the 3-day you must look. And I think if we break the trend line we now have, I think that's the next stop when we're gonna pull back. Maybe I hope so, because it's very nice to accumulate there on that price.
Definitely. Yeah. I think like I said, pullbacks for me are buying opportunities. So 20-25K around that area, there's a lot of support, a lot of activity around those zones, like you said, the order blocks. So that'll be the optimal buy zone for me over the next couple of months.
Okay, Anthony, I want to thank you for this great talk, this great analysis you made for us, and I hope you see again next month for a new call.
Hopefully we're trading much higher in the next one.
Yeah, we will see. We will see what we said now, and we will evaluate it in the coming call. Yeah. Okay. Speak to you soon, and thank you for your performance here.
Cheers, Tim. Bye.